Hello, good day, welcome back. Once again, I'm Teacher Lay, and today we're going to discuss Chapter 6, Tax on Individuals. We have already discussed how corporations and partnerships are taxed. Now we're ready to discuss tax on individuals. This is just a start of the different chapters that will be tackled on individuals. So this is just an introductory chapter. So in here, we're going to discuss in Lesson 1 the different classification of individuals. In Lesson 2, we're going to discuss the different income tax scheme for resident citizens. And in Lesson 3, we're going to discuss the different sources of active income earned by individuals. So for Lesson 1, let's discuss the classification of individuals. When we say individual taxpayer, this is a person who is earning income from whatever source, and that such income is considered taxable under Philippine tax laws. Now, individual taxpayers are classified either as a citizen or an alien. Who are considered as citizens? Citizens are those who are citizens of the Philippines at the time of adoption of the Constitution on February 2, 1987. They are those whose fathers or mothers are citizens of the Philippines, or who were born before January 17, 1973 of Filipino mothers who elected Filipino citizenship upon reaching the age of maturity, and those who are naturalized in accordance with the law. When we say aliens, these are persons who do not qualify under the definition of a citizen. So this is a residual definition. So pag hindi nag-qualify as a citizen, they are considered as aliens for taxability purposes. Now, the different classification of individual taxpayers are therefore resident citizen, non-resident citizen or NRC, resident alien, non-resident alien engaged in trade or business in the Philippines or NRAEB, and non-resident alien not engaged in trade or business in the Philippines but with income from the Philippines. So these are the 5 classifications of taxpayers. So the citizen, which I discussed a while back, are further classified into resident citizen and non-resident citizen. And the alien, which I discussed previously, is further classified into resident alien, non-resident alien engaged in trade or business in the Philippines, and non-resident alien not engaged in trade or business in the Philippines but with income from the Philippines. We are going to discuss each of these classifications in the following slides. So first is the resident citizen. When we say resident citizen, this is a Filipino citizen residing in the Philippines. So this citizen have stayed 183 days or more in the Philippines during a taxable year. Remember that in a year, there are 365 days. And when you're going to divide 365 days into 2, you're going to arrive at 182.5. So, pag ang resident citizen ay nagstay sa Pilipinas ng 183 days, which means that more than half of the year nagstay siya in the Philippines, he will be considered as a resident citizen. A non-resident citizen, on the other hand, is a Filipino citizen who establishes the satisfaction of the Commissioner of Internal Revenue or CIR the fact of his physical presence abroad with a definite intention to reside therein. Or someone who leaves the Philippines during the taxable year to reside abroad as an immigrant or for employment on a permanent basis or for work and derives income from abroad and whose employment thereat requires him to be physically present abroad most of the time during the taxable year. So, example ito yung mga overseas Filipino workers natin or yung tinatawag natin na OFW. A non-resident citizen is also someone who arrives in the Philippines, a non-resident citizen who arrives in the Philippines anytime during the taxable year to reside permanently in the Philippines shall be treated as a non-resident citizen for the taxable year in which he arrives in the Philippines with respect to income derived from sources abroad until the date of arrival in the Philippines. So, ang OFW, pag bumalik dito sa Pilipinas on a certain year, in that certain year, he will be considered as a non-resident citizen when it pertains to income earned abroad within that year. Okay? So, yun yung ibig sabihin nitong statement na to. So, on the year of return, any income earned in abroad will be considered, the person will be considered a non-resident citizen. Okay? In summary, an individual taxpayer who is a citizen may be classified as resident citizen or non-resident citizen. So, if the citizen stays 183 days or more dito sa Pilipinas, which means that less than 183 days siya sa abroad, he will be considered as a resident citizen. Kasi mas madami yung time na nag-stay siya dito sa Pilipinas. More than half of the year. Pero pag non-resident citizen, ito yung mga citizen na nag-stay less than 183 days in the Philippines. Ibig sabihin, nag-stay sila ng more than 183 days abroad. So, yun yung mga classified as non-resident citizen. So, titingnan natin yung length of stay ng isang tao, ng isang citizen. A citizen is someone who is born, di ba? So, na-discuss na natin kanina in the Philippines. Okay, let's have an illustration. Okay, let's say that Jayus is a Filipino who has a 2-year straight contract abroad and left the Philippines on June 24, 2016 to work as office engineer. Okay, so he is an OFW in the Kingdom of Saudi Arabia. After the contract ended on June 24, 2018, Jayus decided not to renew it anymore and just work in the Philippines and be with his family. His salary from June 1 to June 24, 2018, earned from his employer in Saudi Arabia amounted to 600,000. His work in the Philippines from July 1, 2018 to December 31, 2018 earned him an income of 150,000. Okay? So the contract is from June 24, 2016 to June 24, 2016 to June 24, 2018. So, there are 3 taxable years involved. So, what will be his classification as taxpayers in the year 2016, the date of departure in the Philippines, 2017, and 2018, the year of arrival in the Philippines. Okay? So, let's further analyze. So, si Jayus umalis ng Pilipinas on June 24, 2016. Dumating siya sa Saudi Arabia ng June 25, 2016 at nag-work siya doon ng 2 years. Okay, so let's prepare a timeline for the year 2016, 2017, and 2018. So, unahin natin yung 2016. So, June 24 umalis si Jayus ng Pilipinas. So from January 2016 to June 24, 2016, 175 days siyang andito sa Pilipinas. After June 24, 2016, umalis na siya ng bansa. So, in the taxable year 2016, mas madami yung time na nasa labas siya ng Pilipinas, amounting to 190 days. Kesa nandito siya sa Pilipinas. So, for the taxable year 2016, Jeyus will be considered as a non-resident citizen kasi mas madami yung length of stay niya outside the Philippines than in the Philippines. Now, for the taxable year 2017, sabi natin kanina, 2 years yung contract ni Jeyus sa Saudi Arabia. So, for 2017, for the whole year of it, Jeyus is in the Kingdom of Saudi Arabia. So, for the whole 365 days, outside of the Philippines siya. So, for 2017, he will be considered as a non-resident citizen. Now, for 2018, June 24, natapos ang kontrata niya at umalis na siya ng Saudi Arabia. Hindi na niya ni-renew yung kontrata niya. And he decided to just work in the Philippines and be with his family. So, June 25, nakarating siya dito sa Pilipinas. Pero before nakarating dito sa Pilipinas, naka-earn muna siya ng 600,000 sa Saudi Arabia before siya naka-return ng Pilipinas. Okay, so dumating siya sa Pilipinas ng June 25, 2018 to be with his family. Nagpahinga muna siya sandali and then on July 1, 2018 to December 31, 2018, he was able to earn in the Philippines the amount of 150,000 as income. So, what will be his classification in the year 2018? Sabi natin kanina, a non-resident citizen who arrives in the Philippines anytime during the taxable year to reside permanently in the Philippines shall be treated as a non-resident citizen for the taxable year in which he arrives in the Philippines. In our illustration 2018, dumating na siya ng Pilipinas. Okay? With respect to income derived from sources abroad until the date of arrival in the Philippines. So, sabi dito, Jeyus will be considered as a non-resident citizen when it pertains to the 600,000 he earned in Saudi Arabia. So, anything that he earned as a non-resident citizen before his arrival to the Philippines, such income will be considered or will be taxable as a non-resident citizen. But for those income after his arrival in the Philippines, which is the 150,000, Jeyus will be considered already as a resident citizen. Kasi dito sa rule natin, until the date of arrival lang siya considered as a non-resident citizen. Okay? So, that is how we determine the classification of a taxpayer. So, either resident citizen or non-resident citizen. Another classification of taxpayer is what we call the resident alien. When we say resident alien, this is one whose residence is within the Philippines, but who is not a citizen of the Philippines. So, an alien who shall have stayed for more than 1 year by the end of the calendar year is a resident alien. So, pag nagstay na ang isang foreigner dito sa Pilipinas ng more than 1 year, then he will be considered as a resident alien. So, example nito are those foreigners who fell in love with the beauty of the Philippines, like Boracay. Okay, they wanted to retire there, or they wanted to reside there permanently. Okay, so they will be considered as resident alien. Okay, or those foreigners who fell in love with the beauty of Filipinas, or for the um, beauty of the Philippines, I should say. And they stayed for more than 1 year, so they will be considered as resident alien. Next is the non-resident alien engaged in business in the Philippines. Okay, so when I say non-resident alien engaged in trade or business in the Philippines, these are those whose residence is not in the Philippines and who is not a citizen of the Philippines. Okay, so he does not reside in the Philippines, and he is also he is not also a citizen of the Philippines. He is said to be engaged, or he or she is said to be engaged in business or in practice of a profession if he shall come to the Philippines and stay for an aggregate of more than 180 days during a calendar year. So, pag ang isang alien or isang foreigner ay nag-stay ng more than 180 days during a calendar year, then he or she will be considered as a non-resident alien engaged in business in the Philippines. Take note that the length of stay should be more than 180 days. So, if the alien stayed for 180 days, hindi siya mako-consider na non-resident alien engaged in business. Kasi ang qualification dapat for it to be considered as non-resident alien engaged in business in the Philippines is dapat more than 180 days. Take note of that. Next are those non-resident aliens not engaged in business in the Philippines. Okay, so when we say non-resident alien not engaged in trade or business in the Philippines, is a person who shall come to the Philippines for a definite purpose, which in its nature may be promptly accomplished. So, meron talaga siyang purpose nung pumunta siya dito sa Pilipinas. At alam niyang matatapos din yun agad-agad. And the stay there in, he or she stay there in for an aggregate period of not more than 180 days during the year. So, hindi sumobra ng 180 days. So, ibig sabihin, 180 days or less, that alien will be considered as a non-resident alien not engaged in business. So, kung 180 days siyang nagstay dito, then he is a non-resident alien not engaged in business. So, ang example nito are the foreign artists who have concerts in the Philippines and stay for 3 days. Just like Lee Min Ho. Pag pumunta siya dito, nag-promote ng product or nag-endorse ng product or nagkaroon ng concert at nag-stay lang siya dito ng 3 days, then he will be considered as a non-resident alien not engaged in business in the Philippines. So, in summary, a non-resident alien may be classified as either non-resident alien engaged in business or a non-resident alien not engaged in business. So, the length of stay in the Philippines for those engaged in business should be more than 180 days. But for those who are not engaged in business, their length of stay in the Philippines is 180 days or less. So the only criterion considered in deciding whether a non-resident alien is engaged in business or not is his length of stay. Titingnan mo lang kung gaano siya katagal dito sa Pilipinas. Okay, bakit kailangan nating malaman yung mga different classifications ng isang individual taxpayer? It is because they are taxed differently. Okay? So, in general, resident citizens are taxed within and outside the Philippines. So, they are taxed on their income that is earned within and outside the Philippines. Kaya si Manny Pacquiao, who is considered as a resident citizen, will be taxable from his income within and outside the Philippines. Pag nanalo siya abroad in boxing, he will be taxed in the Philippines pa rin. For non-resident citizen, they are only taxable on their income within the Philippines. And so with resident alien, non-resident alien engaged in business, and non-resident alien not engaged in business. So, non-resident citizen, resident alien, non-resident alien engaged in business, and non-resident alien not engaged in business are only taxable on their income earned within the Philippines. Only the resident citizen is taxable within and outside the Philippines. And magkakaiba rin yung mga rates na itatax sa kanila. Okay. Now, let's discuss lesson 2, the income tax scheme for resident citizens. So, take note that resident citizens are taxable within and outside the Philippines. So, just like corporations and partnerships, individuals are also or can also earn income from 3 different categories: capital gains, passive income, and active or regular income. So we have discussed previously that there are 2 types of assets. We have the ordinary asset and capital asset in our previous lectures. When we say ordinary asset, these are assets that are used in the ordinary course of the business. So, ginagamit talaga siya sa business. So, example nito are factory building, accounts receivable, notes receivable, inventories, and supplies. When you say capital asset, those are assets that are not used in the ordinary course of the business. So examples are gain on sale of shares of stocks, gain on sale of bonds, gain on sale of real property. So these are considered as capital gains. When we say passive income, these are income earned with minimal or even without active involvement of the taxpayer in the earning process. So kahit natutulag lang yung tao, nag-earn pa rin siya ng income. Wala siyang ka-effort, pero nag-earn siya ng income. That is what we call passive income. So examples are interest income, dividends, and royalties. When we say active or regular income, these are income that require active involvement of the taxpayer. So examples are compensation income, or those income that are earned in the form of remuneration, yung sweldo, or business income pag you undergo or nagko-conduct ka ng business as an individual. So for the taxability of individuals, again, these 3 categories of income, capital gains, passive income, and active or regular income, will be subject to different income taxation schemes, just like the corporation. But in corporation, ang pangatlo doon is corporate income taxation: capital gains tax, final income taxation, and corporate income taxation. But for individuals, the different income taxation schemes are capital gains tax, final income taxation, and graduated income taxation. So some capital gains are subject to capital gains tax, while others are subject to graduated income taxation. So there are transactions that are resulting to capital gains that are subject to capital gains tax, and there are also other transactions that are subject to graduated income taxation. For passive income, some passive income are subject to final income taxation, while the others will be subject to graduated income taxation. So pag hindi nag-fall sa final income taxation, it will be subject to graduated income taxation. But the active or regular income will be subjected to graduated income taxation. So in summary, not all capital gains are subject to capital gains tax, and not all passive income are subject to final tax. So other income are subject to graduated income tax. So there are capital gains or passive income that are subject to graduated income tax. So for example, interest on notes receivable, capital gain on sale of shares of stocks of a resident corporation. So unahin natin yung capital gains taxation. Just like corporations, there are two transactions that are subject to capital gains taxation for individuals: sale of shares of stocks of a domestic corporation not listed or traded in the local stock exchange held as capital asset. So again, take note of those underlined words. The stocks must be of a domestic corporation not listed or traded in the local stock exchange, and it must be held as capital asset. And there is only a tax if the sale resulted in a gain. And another transaction that is subject to capital gains taxation is the sale of real property located in the Philippines and held as capital asset. So in here, there is a tax whether the sale resulted in a gain or loss. Lugi man siya, it will still be subject to capital gains tax. Basta real property located in the Philippines held as capital asset. Okay, for shares of stocks, it will be subject to final tax of 15%, and the basis will be the net capital gain. So that means selling price less cost. But for sale of real property located in the Philippines held as capital asset, it will be subject to final tax of 6%, which is based on gross selling price or fair market value, whichever is higher. So in capital gains taxation, tax is due within 30 days from the date of sale. Okay, unahin natin yung sale of shares of stocks. So let's have an illustration. Pedro sold directly to Juan shares of stocks of a domestic corporation held as capital asset and not listed or traded in the local stock exchange. The selling price was 500,000 and the cost was 380,000. How much is the capital gain and the capital gains tax? So our solution will be selling price of 500,000 less cost of 380,000 will make you arrive at a net capital gain of 120,000. This net capital gain will be subject to final tax of 15%. So we just multiply 15% with 120,000. And the capital gains tax therefore is 18,000. Okay, another illustration for shares of stocks. Maria sold directly to Clara shares of stocks of a domestic corporation not listed in a local stock exchange held as capital asset. The selling price was 400,000 with a commission of 30,000 given to the person who negotiated the transaction. The fair market value of the shares at the time of sale is 420,000. The shares were purchased for 280,000 with a commission of 20,000 paid to the person who negotiated the transaction. How much is the capital gain and the capital gains tax? So for the solution, selling price or fair market value, whichever is higher. So in our case, the fair market value is 420,000 less expenses of sale. So in this case, we have 30,000 commission paid. So the net selling price is 390,000 less the cost. So the cost is 280,000 with a commission of 20,000 paid to the person who negotiated the transaction. How much is the capital gain and the capital gains tax? So, meron siyang acquisition expenses amounting to 20,000 nung binili niya yung stock. So, 280,000 plus 20,000, the total cost of the stock is 300,000. So, therefore, meron siyang net capital gain na 90,000. And we multiply that with the final tax rate of 15% to arrive at the capital gains tax of 13,500. Next is the sale of real property located in the Philippines held as capital asset. So illustration, Jose, a citizen and a resident of the Philippines, sold his land and building in the Philippines held as capital asset for 6,300,000, which he purchased 5 years ago for 5,200,000. At the time of sale, the property has a fair market value of 6,500,000. How much is the capital gains tax on this transaction? So sabi natin kanina, it will be subject to final tax of 6%, which is based on gross selling price or fair market value, whichever is higher. In this problem, the property has a fair market value of 6,500,000 and a selling price of 6,300,000. So, mas malaki yung fair market value kesa dun sa selling price. So, ang pipiliin natin is the fair market value of 6,500,000. Then, we multiply it with the final tax rate of 6%. So, the capital gains tax, therefore, on this transaction is 390,000. Let's have another illustration. Clara, a citizen and a resident of the Philippines, sold her factory land and building located in Malaysia for 10 million, which she purchased 10 years ago for 7,200,000. At the time of sale, the property has a fair market value of 9,600,000. How much is the capital gains tax on this transaction? In here, the answer is 0 because of two reasons. First, the factory land and building is not considered as a capital asset because it is being used in business. So, it will be considered as an ordinary asset. So, it will not be subject to capital gains taxation. Another reason is that the property is located in Malaysia. For it to be subjected to capital gains taxation, the property must be located in the Philippines. Let's have another illustration. Karina, a citizen and a resident of the Philippines, is in dire need of money. So she sold her land held as capital asset for 3,400,000, which she purchased 3 years ago for 3,600,000. How much is the capital gains tax on this transaction? So in here, binili niya yung lupa 3 years ago for 3,600,000 at binenta niya ng 3.4 million. In this case, Karina has a loss of 200,000. But in our tax rules, in capital gains taxation sale of real property, our basis will be the gross selling price or fair market value, whichever is higher. Hindi natin pinapakialaman kung magkano yung cost ng property. So, kahit nalugi siya, it will still be taxed based on the selling price. So, there is a tax whether the sale resulted in a gain or loss. So, in here, the selling price is 3,400,000 times the final tax of 6%. So, the capital gains tax is 204,000. Next, we'll discuss the final income taxation. For individuals, interest income earned from deposits, whether short-term or long-term, of any currency, deposit substitutes, trust fund, and royalty, will be subject to final tax of 20%. While interest under the expanded foreign currency deposit system, or what we call FCDS, will be taxed at a final tax rate of 15%. Proceeds of pre-terminated long-term deposit or investment of 4 years but less than 5 years will be subject to final tax of 5%. Ito yung mga long-term deposit mo na ang intention mo at first is to deposit them long-term for 5 years, kaya lang nangailangan at pre-terminate. Okay? So, pag pre-terminate mo 4 years but less than 5 years, after 4 years na lang nakadeposit pero hindi mo pa na-meet or hindi mo pa na-reach yung pang 5 years niya, pre-term mo na or withdraw mo na, it will be subject to final tax rate of 5%. But proceeds of pre-terminated long-term deposit investment not after 3 years but less than 4 years will be subject to final tax of 12%. While proceeds of pre-terminated long-term deposit investment na less than 3 years at pre-terminate mo na, it will be subject to final tax of 20%. Any royalties from books, literary works, or musical compositions will be subject to final tax of 10%. While other royalties will be subject to final tax of 20%. For prices, except prices amounting to 10,000 or less, it will be subject to final tax of 20%, while winnings, except those won in the Philippine Charity Sweepstakes amounting to 10,000 or less, will be subject to final tax of 20%. Okay? There's a difference between prizes and winnings. When we say prizes, ito yung napanalunan mo na nagbigay ka ng effort. So, there is an exerted minimal effort dun sa prize. Like, for example, sumali ka sa isang competition. Okay? Like a beauty contest or other competitions, tawag ng tanghalan or singing contest, dance contest. Meron kang ginawa. So, these are what we call prizes. While on the other hand, winnings are based on chances. Nagbet ka or nagtumaya ka, it will be subject to final tax of 20%. Cash and property dividends received from domestic corporations will be subject to final tax of 10% for individuals. Take note that in corporation, dividends received from domestic corporations or intercompany dividends are exempt from taxation. But for individuals receiving dividends, cash or property dividends received from domestic corporation will be subject to final tax of 10%. So that's the difference. And let me just reiterate that in final income taxation, tax is withheld at source. So whatever you receive is already tax paid. So nabayaran na yung tax na. So kung meron kang deposit sa bangko, any interest that you receive has already paid the tax component thereof. Okay, so let's have an illustration. Althea Jaisel, a resident citizen of the Philippines, had the following passive income in a year. So let's determine the final tax. Royalty from an invention amounting to 320,000. So let's look into the table. Under royalties, we have royalty from books, literary works, musical compositions, and other royalties. So the royalty here is from an invention. So it did not state whether it's books, literary works, or musical composition. So therefore, this will be subject to final tax of 20%. So 320,000 times 20%, the final tax is 64,000. Next, royalty from musical composition, 160,000. So clearly, it is a musical composition royalty, so it will be subject to final tax of 10%. So 10% times 160,000 will make you arrive at 16,000. Prize from Tawag ng Tanghalan, 2 million. So siya yung grand winner. Sabi natin, prizes, except prizes amounting to 10,000 or less, will be subject to final tax of 20%. So the price of 2 million will be subject to 20%. So final tax should be 400,000. Ibig sabihin, yung winner makaka-receive na lang ng 1,600,000. Kasi babayaran mo na yung 400,000 na final tax. Another, interest under the foreign currency deposit system amounting to 70,000. So sabi dun sa table, interest under expanded foreign currency deposit system will be subject to final tax of 15%. So 15% times 70,000 will make you arrive at 10,500. Next, cash dividend from a domestic corporation amounting to 12,000. So cash dividends will be subject to final tax of 10%. So 10% times 12,000 is 1,200 pesos. Next is interest from BPI deposit amounting to 30,000. So sabi dun sa table, interest income from deposits will be subject to final tax of 20%. So 20% times 30,000 will make you arrive at 6,000 final tax. Interest from a long-term deposit at BDO with maturity of 5 years, pre-terminated after 4 years. So after 4 years but less than 5 years will be subject to final tax of 5%. So 5% times the interest income of 50,000 will make you arrive at 2,500 final tax. Last, interest from a long-term deposit at BDO with maturity of 5 years, pre-terminated after 2 years. The interest amounts to 35,000. So after 2 years, so in here, it will be subject to final tax of 20%. So 20% times 35,000 will make you arrive at 7,000. Third is the active or regular income earned by resident citizen. So for active or regular income earned by resident citizen, it will be subject to the graduated income tax. So we will follow the graduated income tax table as shown in the slide. Amount of net taxable income, if 250,000 or less yung taxable income, the rate will be 0%. So, 0 yung babayaran na tax. But for those earning over 250,000, but not over 400,000, it will be subject to 20% of the excess over 250,000. For those whose income range is over 400,000 but not over 800,000, it will be subject to 30,000 fixed plus 25% of the excess over 400,000. For those citizens earning over 800,000 but not over 2 million, will pay 130,000 fixed tax plus 30% of the excess over 800,000. And those with income over 2 million but not over 8 million will pay a fix of 490,000 plus 32% of the excess over 2 million. And for those whose income is over 8 million, they will pay tax of 2,410,000 plus 35% of the excess over 8 million. So let's have an illustration. Andre Jayus, a resident citizen, had a taxable income amounting to 297,000 in a given year. How much is the income tax? So Andre Jayus has a taxable income of 297,000. So we will look into the income tax table or the graduated income tax table kung saang range siya mag-fall yung taxable income. Okay? So 297,000 falls in the bracket over 250,000 but not over 400,000. Ang sabi doon, the tax rate will be 20% of the excess over 250,000. So, yung excess lang ang tataksan natin ng 20%. So, our solution will be taxable income is 297,000. So, we will deduct the lower limit of the table amounting to 250,000. So, ang excess lang is 47,000. At ang tax rate in this range is 20%. So, therefore, the income tax is 9,400. Another illustration, Kel Andre, a resident citizen, had a taxable income amounting to 560,000 in a given year. How much is the income tax? Okay, so 560,000 will fall under the range over 400,000 but not over 800,000. So, ang rate will be 30,000 plus 25% of the excess over 400,000. So, let's solve. The taxable income of Kiel Andre is 560,000. I-deduct natin yung lower limit ng income bracket na 400,000. So, meron siyang excess na 160,000. So, yung excess will be subject to a tax rate of 25%. So, 160,000 times 25% will be 40,000. Then, we add the fixed amount of 30,000 to arrive at the income tax of 70,000. Illustration 9. Okay, Inday, a resident citizen, owns a sari-sari store and had a taxable income of 240,000 in a given year. How much is her income tax? So, ang taxable income ni Inday is 240,000. So, tingnan natin kung saang range siya mag-fall. Okay. So, not over 250,000 yung taxable income niya. So, our answer will be 0 because there will be no income tax as long as the taxable income does not exceed 250,000. Okay. Another illustration. Maki, a resident citizen and a famous boxer, had a taxable income of 100 million in a year. How much is his income tax? So, 100 million ang kanyang income, taxable income. Hanapin natin yung range kung saan mag-fall yung taxable income niya in the graduated income tax table. So, mag-fall siya under over 8 million. So, the rate will be 2,410,000 plus 35% of the excess over 8 million. So, for our solution, taxable income of Maki is 100 million less the lower limit of the tax table of 8 million. So, meron siyang excess na 92 million times 35% kasi yun yung rate doon sa bracket na yon. So, you will arrive at 32,200,000 plus the fixed amount of 2,410,000. So, the income tax of Maki will be 34,610,000. So, that is how to compute for the income tax of individuals earning active or regular income using the graduated income tax table. Okay, our last lesson, lesson 3, are the sources of active income earned by individuals. So, there are different sources of active income of individuals or earned by individuals. They may earn active income from working, or they have an employer-employee relationship, so they are earning compensation income. Or they may conduct business and they will earn business income. Or they may conduct both compensation income and business income, so they will have mixed income. So these are the different sources of active or regular income of individuals. In the next chapters, we will be discussing how these active income are taxed. Compensation income, business income, and mixed income. So for now, this is the end of chapter 6. Thank you for listening and God bless.